Hey guys, welcome back to the channel. In this video, we're going to go over the overall market just in general. We're going to look at some of the major indexes, look at the VIX, look at the Fear and Greed Index, and give you my thoughts moving forward. Before we do, just to reiterate, not a financial advisor. Make sure that you do your own research. Also, if you find value in the video, smash the thumbs up button, subscribe to the channel if you enjoy our content, and hit the notification bell. That way YouTube can let you know every time we release new content. So other than that, guys, let's dive right on into it. All right, guys, so starting off with the S&P 500, we're going to take a look at that. We're having a bit of a pullback after our decent little run-up that we've had. We are crossing over from bullish to bearish on the 180-day 4-hour time frame on the MACD indicator, and we're trickling down to about fair value. Your level of support you want to keep an eye on is at about 4,000, really 4,026. To be exact, if we can bounce off of that, that's a good sign of price strength moving forward. If we break below that, then you have potential to retest that 3,800 level, which is what we kept expecting typically to be the short-term bottom at least. And it looks like we're pretty spot on that, but I'm hoping that would be the absolute bottom if we do fall below this level here. Okay, so a lot of people are talking about that this was probably just a bear market rally, that we should see another leg down more to the downside. So that's kind of yet to be seen. We'll have to just kind of wait it out. I think Monday into next week, I think we could see another red day just based on the technicals, seeing that we are crossing over here from bullish to bearish. Okay, so now we're going to take a look at the Dow Jones, or UDow, which is what the ETF that actually tracks the Dow Jones. Your charts are going to look pretty similar, other than the fact of this was a little bit closer to the red SMA line. We poked our head up several times on the red SMA line and just keep getting rejected here. We just need a bust above about $64 to $65 and hold there in order for us to confirm that we have a bullish reversal in the making here to send us higher and retest all these levels here. And as you see here, we are currently selling off. We're actually in a bearish pattern on the 180-day 4-hour time frame on the UDow ETF. So falling down here, we're not even at fair value yet, so we still have some room to go down, possibly retest at about the $57, $58 mark before bouncing up. Okay, if we do break below that, then you're looking at about $50 from there. And then we're going to look at TQQQ, which is the ETF that will track the Nasdaq, and kind of similar to UDow here. We're kind of trying to poke our head above the red SMA line, just can't seem to do it. We're currently selling off, and the good thing is there's not a whole lot of volume on the selling side of things, which is kind of neat. Is if we start getting some buying pressure, that should send it up, and hopefully we can retest this $39, $40 level. If we do that, if we can break above about $40 and hold and act as support, then we've crossed over that red SMA line, and we are back to a bullish pattern overall for the 180-day 4-hour time frame. Okay, as far as your inverse ETFs, you have SQQQ, which will basically shoot up whenever the Nasdaq is selling off. As you see here, we shot up from $44 all the way to $48 today. That was one of our picks for the week to make a quick little day trade on if the markets were down. Instead of UDow, you can trade SDow, which is going to go against the Dow Jones. If the Dow Jones starts falling down, this will shoot up. Pretty much the same thing here. We didn't get a big spike up, but we did get some type of spike up. And also UVXY, which basically UVXY actually tracks the VIX. So the more volatile we get, more volatility in the markets, the higher the VIX rises, this will rise as well. Okay, now we're going to take a look really quick at the S&P 500, the longer term time frame. I know we had someone request that last time I looked at it. They enjoyed seeing the longer term time frame as far as what we're looking at here. So I'm going to go ahead and change the time frame up to make it more up to date to where we are today. So from 1/1/20 to where we currently are, which is June the 3rd, or I guess I'll probably just go through June the 2nd. All right, we're going to apply that. And here we go. Okay, we'll take this red we'll take the Fibonacci retracement levels out, and we'll go to 2191.86. We'll go all the way to 48.18.62, and we are at a major support level still for the S&P 500 for the longer term. This is over the last couple of years. Okay, this is not just, and for some reason it didn't update for June for some reason. Okay, so this is actually back in May. Let me see if I can change this out and fix that. So 1 second. Here we go. So this is June. Now we're at June 2nd. I have to just kind of refresh it. Okay, so we bounced off of that support level of about 3,800, and now this is the major resistance that we're facing is about 4,200. So we've got up here 41.98, and then we got rejected. So we could fall down and retest. We really could fall down and retest that 3,800 level again before making our way to the upside. But as you see here, this is the high from from 48.18, and we're still trading pretty high on that fib level. You could fall below. If we get another leg down, you're looking at 3,500. If we bottom out at 3,500, then you're setting yourself up for some good buying opportunities and then a potential big move to the upside. So let's take a look, guys, at the VIX and the Fear and Greed Index and see what they're telling us. All right, guys, so the VIX is actually at about 25, not a whole lot of volatility. Our market sentiment is still pretty decent. We're in the positive here, 1.18. Typically, you want to see this in the positives for sure. It'd be great to see it back into 2s or the 3s. That means we're getting some, really, really great, consistent green days in the market. The VIX, you want to see typically below, 20 or below. It kind of stabilizes the market. It shows that we're, consistent, we're comfortable, things are moving along. As long as this thing is mid-20s, it could easily spike back up to 28, 30. And in that case, you're getting some, some red days in the market, and the volatility is picking up, and UVXY is going to be your play that you're looking to get in at that point. All right, guys, so taking a look at the Fear and Greed Index, we are in fear, and we're flirting with getting back to extreme fear. So if we see a couple more days in the market where we're red, we're going to fall right back into extreme fear, which again is going to give you more and more buying opportunities. Okay, and especially for a longer term portfolio build on some good solid companies, not just any type of stock. You kind of have to be strategic about it. Which are the companies that have gotten beaten down that you feel are going to make its way back up, such as Tesla, AMD. Let's see, who are some other ones? Nvidia, maybe Amazon. Amazon should have had their stock split. By next week, you're looking at maybe getting in. Amazon having a massive stock of 20-to-1 stock split, which is crazy. It's going to shoot the share price down to somewhere in the hundreds. Okay, and that makes it extremely cheap. You can start nibbling at it. Every month, just throw a couple $100 in there and build your portfolio out, and then let this thing ride out. But anyway, just kind of keep an eye on the Fear and Greed Index, because every time we hit either fear or extreme fear, it creates some good buying opportunities for your longer term solid company. So anyway, that's all I got for you in this video. I talked about making a ZNOG technical analysis video if we hit a certain point. However, we didn't break past that 35-cent mark as of yet. Once we do that, that's probably when I'll go ahead and make another technical analysis video, because the fib levels are going to actually change at that point, and we'll have to look at some new support and resistance levels. So that's all I got for you in this one, guys. Let me know your comments below. Other than that, we'll catch you in the next one.